In this video, I'm going to show you some of the first steps you'll take after connecting to Xero and creating a new Brixx plan. Brixx is a standalone financial modeling tool which can be used with or without Xero. This video will be more focused on some of the unique aspects that you'll encounter when using Brixx with Xero. We also have a more general Getting Started series that runs through how to structure your plan, enter your forecast, and use the various tools available in Brixx. Links are in the description below. So I've just run through the plan creation process shown in the previous video and connected to the Xero demo company. On the right, you see the charts of your forecast in the dashboard area. The figures in these charts are being generated by the components of your plan over on the left-hand side. All of your income, expenditure, assets and funding sources sit in this area and are organized into sections and groups. These components were created and named after many of the accounts from the Xero company it connected to. Clicking any of the rows reveals the forecast for any particular component. The figures we have so far were entered automatically during the initial connection process. The import took the previous year's data from my Xero company and copied it into the future to base my forecast on. From here on out, you adjust the forecast manually. Further syncs with your Xero company will not change this forecast. Now, you can begin editing these figures straight away. However, you may wish to make some changes to your plan structure first. This structure is not locked to your chart of accounts. It is completely independent of your data coming from Xero. You are freely able to expand and reorganize it as you see fit. You could keep this as a very top-level forecast, or add hundreds of components to forecast all your products in great detail. You could keep these sections and groups as they are, or you could organize your plan by different regions, different sales teams, different outlets, or however you think about your business. For example, this particular Xero demo company doesn't have a very detailed chart of accounts. My sources of income are lumped into these two revenue accounts. Now, if you want to forecast in more detail in Brixx, you don't have to go back to your Xero company and create a whole new set of revenue accounts. I could replace these with 10 income components, split across two different groups if that's how I want to forecast my activities. Remember to check out the videos linked in the description below for general guidance on how to go about building structures like these in Brixx. Okay, let's look at salaries as another example. Instead of forecasting by your payroll accounts, you could add all your staff as individual employee components, grouping them together by the team structure you use in real life. This would then allow you to model hiring new employees over time, using the timeline to adjust their starting dates. It's up to you where you want to expand your plan in more detail. We've designed Brixx in this way so that you aren't tied to how your data is set up in Xero. You can freely experiment in Brixx without having to consider how it might fit into your existing structure. The future is, by nature, different to the past, and you need an unrestrained sandbox to explore possibilities and scenarios. Your Xero data only comes into play when we get to the outputs. In your actuals versus forecast reports, your Brixx forecast will seamlessly match up to the data coming from your Xero company. So let me show you how that works. As you saw earlier, I've rebuilt the content of this section, adding a number of product categories in more detail than my Xero revenue accounts. I've also added some basic figures for each component, representing my estimates for the coming months. Let's head over to the reports to see what this looks like. In the actuals versus forecast report for cash flow, I can see the first column shows the total of my Brixx forecast for this month. It is automatically compared against the actual figure coming from Xero for January. Now, when I drill in one level, it splits this amount out by my Xero accounts. You can also see that my entire forecast for January is sitting in another row called Other Cash Received. By default, when you add new components like I did over here, the result sits in this Other bucket until you're ready to choose what it needs to be associated with in Xero. You can leave it there if you wish, it's not doing any harm at all, but you'll only be able to analyze the variance at the total level. So let me show you how you can improve the matching through component associations. Clicking on one of the income components in this first group, I go right to the bottom and select this association drop-down. As this is an income component, it gives me a list of accounts that sit under the revenue heading from the chart of accounts matching area. If there is an account missing here that you'd expect to see, it is likely due to the matching defined in the chart of account screens. Head to your Xero tab to make changes and move your Xero accounts under different Brixx headings if required. I'll choose 200 sales and save and close. Now, the forecast outputting from this specific component matches against 200 sales in my report instead of the other cash received. You can associate more than one component to the same Xero account. So let me just run through the same process again for the rest. I have associated my income components across the 2 revenue accounts I have in Xero, and now they reflect this in the report. I can drill into this Xero account to see all the Brixx components I have associated with each account. You can use this system how you see fit. You can maintain one Brixx income component for every revenue account you have, or you could have multiple income components for each revenue account in Xero, as I have done here. It all depends on how much detail you want to forecast in, and how much detail is in your Xero chart of accounts. Other types of Brixx components work in a similar way. The operational cost component has an association drop-down for accounts matched in the other operating expense heading. Some components output to more than one place in your reports. For example, an asset, such as a piece of equipment, has a purchase amount, depreciation, and disposal report impacts. In your Xero company, you'll have several accounts to deal with these more complex transactions, and the Brixx asset component has additional association drop-downs to cover them. Remember, these association drop-downs just handle how your forecast lines up to your actuals in variance reports. You don't need to complete them straight away if you're unsure how to match them, or you just want to focus on your forecast. Finally, if you add new accounts in Xero and then import them into Brixx, this won't automatically create any new components. Your plan structure here is completely controlled by you in Brixx. It is not influenced by further updates coming from Xero. That just about covers your first steps in your Brixx plan. Remember to check out further videos and guides linked in the description below.